The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Hi, everyone. Basil Chapman sitting in for Tom and Tommy O'Brien in this Bull Bear Trading Hour, and it's my pleasure at this particular point to tell you that there are all-time highs in almost all the indices, not the IWM, not the Russell, and I suspect that we are getting really close to at least a pullback for a day or two, and then a couple of new highs, and then I think we've got to start being a little careful. So because this is I think it's a critical week or so in the market coming up, I want to go straight to Kevin Hinks. Kevin Hinks, how are you?
Good morning, Basil. Nice to talk to you.
Nice to speak with you. How are you doing?
Good for Tuesday, other than I'm in about 2 feet of snow here in Chicago. Besides that, Chicago doesn't have any energy problems like Texas in general and the Dallas area. So we're relatively warm and full of power here, Basil.
Well, that's very good. I was a little afraid that our snow and rain would turn to freezing ice. Fortunately, we got a little warming trend, so we're okay. So, Kevin, with whatever is going on this coming week, certainly what you do with your options, the discussions that you have, just those intricate and very prescient discussions that you have based on the options. I just wanted to ask you a question here. Coming up this week, there are going to be earnings reports, but at the same time, I'm suspecting that at this moment in the market, coming to all-time highs, starting to look a little extended, that there's a lot that you could discuss so that people who are looking to use options as a way to at least ameliorate any downturn in their portfolios, what they can do. So I'm going to hand it over to you, and I'd like you just to discuss what you are going to be speaking about on your show at 11 today.
Yeah, based on someone's options expertise, be it beginner, intermediate, or advanced, there's ways to play the other side of the market or hedge your account without taking a tax event. A lot of people look at their stock portfolio and worry about that stocks have run too far, too fast, and interest rates are starting to creep higher. And just because, a lot of things coming up with the stimulus package, maybe you're worried about the fact that the market may be disappointed if we don't get $1.9 trillion. What if it's $1 trillion? So the question is, how do they take some of their risk off without taking a tax event? Well, the simplest way to do that is by selling covered calls against your individual names. Now, if you're a little bit more advanced, there are ways we call beta weighting your portfolio to get it to basically one delta, one level of exposure, and then you can hedge that number. So there's ways to hedge your account without taking that tax event. There's ways to play the other side of the market against the exposure in your portfolio. So
Kevin,
we teach several ways to do that. Go ahead, Basil.
I just wanted to say that for people that are kind of new to invest, we've got a lot of new investors, millions in fact. So for people who are kind of options, cool. What is that? Basically, you're taking a much smaller amount of money than the overall portfolio that you have, and you can take that as a very separate unit, and you can use that to mitigate any downturn or up to whatever it is. You can make a strategy using much smaller amount of money to be able to have some kind of insurance. Is that correct?
Sure. Like case in point, Basil. If you really have an opinion in Amazon, let's say, well, most investors can't spend $3,285 on shares of Amazon. That's a lot to invest in one name. So the question is, how do you do it? Well, use options allow you to play directionally in a stock like Amazon for a relatively low, reasonable amount of margin to put up.
Which you can also, you can know beforehand what the loss factor is, and that's really important, isn't it?
What we talk about on our show on a daily basis, and the only way we teach, Basil, is risk-defined trading, which means what? Well, you know the total exposure that the trade has. It's either what you invested in it, which if you buy a vertical call spread or some type of a spread, what you spent is all you can lose. Now, if you were to sell a vertical put spread, right, like as a bullish play, as a passively bullish play, all you would have exposure to is the width of that vertical put spread. We don't teach people to sell naked options with large amounts of risk implied in them, embedded in them. We teach you to trade risk-defined always. And we use three pillars, Basil. That is risk definition, trading high probability trades, and always, if we can do it, to collect options decay, not pay options decay.
What I do like, Kevin, is that it's like teamwork when you're discussing it, so that people can come up with other ideas, and then there's a kind of a consensus. And in fact, people are listening, and they're able to understand very clearly what you are defining. I love that. I think it's really a terrific show, and I recommend people listen, tune in, and just if you're not used to it, you will get used to it very quickly, because you explain it in such a way that you are telling people what their risk is, what the potential benefits are. I like that very much.
Thank you, Basil. You know what? I learned how to trade options from being on the floor of the Chicago Board Options Exchange, and you learned it via osmosis and asking questions. And so I try to give that whole same learning experience, like I'm the trader and the listener is the clerk that's learning how to trade. And that's the way we try to present it to them.
One of the aspects that always fascinates me is that if you're having basically a naked call or a put, that is, you just have, that's because you're trying to play a trend, you can see your root position rally sharply, and yet you won't make any money because you've chosen the wrong option or the wrong time frame. And that's what you explained so nicely. I like that.
Exactly right. We teach our viewers to play options from the right side. The overall implied volatility will drive the strategy. There's a strategy that works in each trade. We just help our viewers to find the right strategy. It's like the right church, the wrong pew, right? We don't want you to have the right idea, but the wrong strategy. And sometimes that's the difference between success and failure. It's plugging in the proper strategy for the right overall volatility environment.
So, folks, listen to Kevin, and I think that at 11 o'clock, that show is really terrific. Thank you so much, Kevin, for being here, and looking forward to your show.
Thanks for having me on, Basil. Have a great day.
Thank you. Folks, we'll be back. Excuse me. Dow's up 63. S&P's up 4.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Another pumped an all-time high in the various indices. This is Basil Chapman. This is the Bull Bear Hour, and I'm sitting in for Tom O'Brien and Tommy O'Brien. And of course, we want to congratulate them on the birth of a new child. In fact, it's very interesting. I just got an email from my brother. In fact, it was a call very early this morning, and in Sydney, Australia, where he lives. It was 1 o'clock or something, and he just told me the news that his son just had a second child. One of his sons had a second child. Wow. Interesting time, isn't it? Just a real quick question I got here. ABV, let's see what it is. 9-day moving average just crossed up and over the 14-day moving average. Not really. It is trying to. ABBV, which is AbbVie Inc., and it is trading right now at 105.34. No, I think this has got a little bit of way to go. That weekly chart is still pretty good. I'm a little concerned that the daily chart is going to be stuck in a range between about 107. If it can get over 108, that's a positive. But right now, I think it's stuck between 107, and it really needs to hold 103 support. So just for the moment, if you are in it, and if you've been in since last week, you're just about breaking even right now. I just have to say that I don't see this. This particular pattern can be really positive. It's the, let me just show you something here. So in the Chapman Wave methodology, what I'm always looking for is just three basic patterns. Straight up, that is looking at trend lines. So it's a straight up trend line or down, a cup formation, or an arch formation. There's a combination. I'll make it red because if the left side low in this arch formation goes to a peak A and then a B minus because it keeps coming down and it takes out that left side low, it can go quite a bit lower. On the right is the reverse Y pattern. That green top makes a cup formation or a V-shaped formation. If it takes out that left side high in a particular pattern, it can go quite a bit higher. So this particular pattern right here says this H can then go to a lowercase h, dreaded H we call it, because if it takes out the left side low, that's a problem. But this could make an M, a lowercase m with a second arch formation. That's what I think I'm looking at here. It could become very bullish. That's what I'm saying. If it is able at 106 105.36 up 92 cents now, ABBV. If it's able to break into the 108, then I think all of a sudden that high that was made at about 110 about 2 weeks ago, if that gets pierced in February, that says watch out, because then you're going to have the next high, which is the high that was taken. Watch out on the upside, which is the high of the 26th of January at 111.30. Takes that out. You just move to the left side to each higher high. All of a sudden, you're looking at 113.44, the high of the 13th, and that says that the weekly chart should finally make a leg C. I think it's going to chop around first. So, yes, you're in it. And I think that I'm going to just say there's nothing wrong with this pop to the upside. There would have been something wrong if it dipped underneath 102.90 this morning instead of gapping up 94 cents. I'm just looking at this as a pattern that says, look, the MACD has got a W formation in the daily, but the histogram is still quite a bit away from being positive, and the stochastic's back to 26%. If it was at about 36 or 38%, I say, aha, now I've got some more. Let's go to Victor in Paramus, New Jersey. Victor, how are you?
Good. What do you think of PLTR? Their earnings came out, and their expiration, their lockup expires on the 19th. Where do you think we're going to?
So it expires on the 19th. So the folks, Palantir...
You know what I mean? That's when the lockup does, and the shareholders can sell it.
Oh, no. That's when the lockup expires, so that's where they can sell it, and it's already being sold if it's down 3 at 28.73.
Well, it's their earnings.
Yeah, so you and I have followed this quite some time. It hit that 45 area, and both of us were thinking that there was a bit of a pullback that was likely to unfold. That bit of a pullback was from 45 to the 30 area. That was very deep. Right. And then what we got is the pattern I was just discussing a few moments ago. One of the Chapman Wave patterns is this H pattern. Well, look what happened. It went to peak A, and then it failed at about 39, and now it's trading underneath the left side low. That was the low of, give you the exact figure, that was 30.50 on the 2nd of February. And now we're looking at the 50-period moving average. You know, I've been somewhat impressed with the action since the IPO back in the $8-9 area about, 6 months ago. It screams up to 45, but it's given back a lot. Something is software platforms, Palantir, Tech Inc. There's something wrong.
We have a lot of shares outstanding.
You think that's because definitely it's not acting the way it should. It's in the tech sector. It's in a tech sector that was looked upon very favorably when it was running up into the to late January. Now I'm just going to have to give this a miss. It's on my list, and I keep looking at it, but I don't. When it made that low back at 30, I thought, now comes a good chance for a pop. And when it was, if you had called me on the 8th of February when it was trading at 39, I would have said, hey, this is quite good. I don't want to see it give back under 35, but if it's able to hit 40.50, that's outstanding action. What it did was it failed. I'm just going to say to you.
So where do you think we're going? Do you do Fibonacci retracements? Can we go down to 1741 or 2269?
No, I think that the whole area between 2026 and the low that was made right there of 2250, I think the area of the 26 to 24 is going to be the key support. If it breaks that, I go one step at a time. If it takes that out, if it starts over 2 weeks, if it's able to hold that area, then it's forming a very nice base from which there could be another rally attempt. But I don't like the way it's given back so much. And I've only got a B in the weekly chart, but this is an IPO. So it says it should get to a C. But you know what I'm going to suggest? Let's watch it for a couple of days. Today is Tuesday. Let's look at it again on Thursday.
And weekly is 540, so. It's
very
volatile.
It is. It's volatile, but the technicals and the weekly are still not bad.
Locks up, you think it's going to go down again, another leg down probably?
Yeah, that's what, that happens so often when the lockup completes. People just finally get out. I'm just going to say, let's watch this. There are so many others in the area that actually are holding well. I'm inclined to say, just give this a miss. I'd rather be buying higher highs and higher lows than lower highs and lower lows. So let's just hold off for a moment.
All right.
Okay, thanks for calling.
Right.
Okay, Victor, thank you very much. Folks, we're looking at PLTR, Palantir Tech. It's trading at, just on Friday, it was back in the 31s. Today it's at 28.97, down 294. Something's not right with this baby. Okay, let's do a couple of things here. I want to run this through because I did it at the update, and this is the so this is really the binary hour. So let's look at the positives and the negatives of the market. As we're about to go to a break, the Dow is up 118. So it held that first bout of selling. It's come back. It is at the high of the day, which is 31,599. Just 30 points away. It's looking excellent right now. I'll be back in a moment. Basil Chapman sitting for Tommy O'Brien. We'll be right back.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Fine. Look, here we are. We're looking at, I had a question in the den. Could I show the OIH chart? This is the oil service ETF. The pattern that we've been looking at here, and what I showed actually for subscribers to my opening call, my daily newsletter, I did a video last night. I did a big one on the weekend, but I did one last night because I had 5 stocks that we were looking at as potential for today. My biggest concern is the gap up. I love the gap up. I have a thing called the Screamer section where we buy stocks below $10 in the single digits, and we try to get them for a quick 3 to 4% gain intraday. And if it works really well, we can take a little bit off, and then we can hold the rest, because if it closes towards the high, we're in at a great price. Well, the pattern we've been looking at is this kind of rectangle. It's not a U-shaped pattern. It's really more a defined rectangle. And what it says is, within the context, this is the OIH of the monthly chart, we saw so many stocks in the oil sector and the natural gas that had had horrible red candles for months, got into lows back in around about March, April of last year, and then started a rally, then gave it up, made an H pattern that was successful because it never took out the left side low, and then took out the left side high, which is what the OIH did. So a lot of the patterns that we see turns out to be not just in oil, but in natural gas area, and quite a few sectors within the commodities. And what we're looking at is slowly this rectangle, I'll make it a little lower here. I like to do it very conservative. That would be the first level of resistance. This big candle high that was on March at 180. This 185 was the high, 185.25 as it got started the month of March of 2020, had a little problem because it dropped down to 68. Oh my goodness, look at this. 66 round number low. I like round numbers. I forgot to note that. 66.00 R/N low. Round number low. Well, it's trading almost 3 times higher. It's at 189 right now. So this has gone above today's high is 190.50. So 190.50, and we were saying that the high in April was 185.20. So it's above that. So a lot of charts, and that's very constructive because there's a monthly chart on the right. Look at the MACD, the way it's expanding. Look at the on-balance volume, how high, that's the blue line. Look at the stochastic improving out now at 39%, not great. But that says, wow, if the whole oil sector is seeing the monthly chart of the stochastic only at 39%, and we've seen that major tops occur over 80%, sometimes 90%, 97%, that says that, wow, maybe for 2021, one of the areas that's going to, even if there is a sharp pullback in the next week or 2 or 3, this is a sector to keep an eye on. Why? It doesn't have to do everything in a year. It could be 2-3 years. That's not the point. The point is that fund managers are always looking for lagging sectors. And yes, a spectacular move from 66 to 188. But this is an ETF that was trading at some point at 1,000. It doesn't sound real. At 1,160, just going back to July-ish of 2014. So 2014. So I would say declining from the 1100 area to 66 is quite a serious blow, right? So this is an area that fund managers are probably going to drift to. So it's nice, and this is what we were looking at for my subscribers today. We wanted to get into this kind of sector, but already we didn't get into the position we wanted. It was trading in the 9s. It's now trading at 10.09. Actually, we wanted to get in. It was trading in the 980s, and we wanted to get in lower than that. Missed it, it gapped up, and that's just the way it is. Other times I was prepared to buy the screamers because it was sort of early in their big move up, but this is getting a little bit late in the tooth, a little long in the tooth, just on the shorter term, so I'll have to try that again. So OIH acting well. Look at crude oil. Crude oil is trading right now. Now it's up 39, even though it's below the high of Friday. Was that actually Friday or last night? That was the 15th. Last night had a high of 60.95 in the continuous contract. That's a leg E. This is a leg D with a little doji candle so far, just the very beginning of a week. I shouldn't talk about the candle. Anything can happen. But it is a leg D. The MACD in the weekly chart is good. Stochastic's great at 95%. So I anticipate this Chapman Wave falling axe formation where it broke out above. You can come back and do a little retest in the 58 to 57 area over the next few days, and then maybe try to make another new high. We'll watch this one real closely. But it is somewhat extended just on a purely technical basis on the near term. Near term means if I go to 120-minute chart, you'll see what I mean. 120-minute chart right there. We've gone to peak A, B, C1, C2, and it's pulling back because it'll have another little bit of a pop. So this just says, hey, be a little careful near term. Near term meaning days, hours to days. The shorter term says should still be higher highs to come. Let me just show you the S&P. S&P all-time high. All-time, as we speak, 39.49, 23. Up 14.36, up 0.36%. But it's starting to break. This is a technique that I developed a long time ago called the Chapman Wave Inside Track Repellent Zone. So in this repellent zone, we've gone right to the outer edge of the green line. Green meaning start to break above it. You've taken that resistance and you've pierced it, and now you've raised the base of probably raised the base of support. In this case, the 3880s is your key support. 3880s. I'm talking kind of over this week, but I would say on a very short-term basis, I'd go to this trend line right here and say 39.30 to 39.20 is your very close near-term support. Excellent action. And look at the weekly chart, extended this leg E. Could even be an instant reset, but I'm calling it an E for now. And the monthly chart is only in a leg B. I mean, this is extraordinary action. Look, that's the monthly chart. We're at new all-time highs, exactly mid-February. That means you've got to wait for all of March to make a lower high than what's made in February to establish a peak B. Remember, it's called a floating ladder. This B, this was the moment it broke above A by 1 penny, that became a leg B, floating ladder, because the next month was higher. So it still is a leg B. Next month, that was January, was higher, still a leg B. And now February is high, still a leg B. It becomes a peak B when there's a lower high bar the following month. So now let's go to the QQQ, NDX 100 trading vehicle, new all-time high as we speak, 338.10. Oh, I meant to mention, just for disclosure purposes, we've been long the Dow since March 23rd last year. Via options, had fantastic gains. About a week later, the 3rd, I think it was, of April, we went long the diamonds. We're still long positions. We've taken some profits off, still long the core. And now we're talking about the QQQ trading, also all-time high. And the IWM, which has been long since the 11th of November at 173 is trading at...
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Are you grinding in the market but seeing little to no return? Or are you a successful trader simply looking to make his job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD, Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. We're back. Basil Chapman sitting for Tom and Tommy O'Brien. This is the binary hour. And what we are looking at here, see, remember I mentioned that fourth highest peak D? Here it is in the 10-minute chart. A high was made at 39. I believe that was the high of, 59.25 peak D. It makes that arch formation. Remember, we were looking at that arch formation? And then it has a second one. Remember, I said if it fails below a D, you got to be careful. So it went to a peak C minus, because what it do, it turned right over. See this pink line, the 200 period? I'll be doing this in my show today at noon. And what's really important is that, in fact, I could have used this as a recording that gets replayed at noon. I'm thinking that there is so much that I want to look at. I had so many questions over the weekend. I personally had questions that I want to deal with, and I said that I would try to deal with it live on the show for subscribers and to show people listening to Tiger TV what we're looking at. This 200-period moving average, this pink line right here, you see how it became support? And then, boom, it became resistance. This is at 39.44 in the E-mini, the S&P E-mini. Now, look, now it's you're bumping into that resistance. See this black and pink line right here? That is the 14-period moving is black. Pink is the 9-period moving average. Why? Because it went and turned negative. And now it is struggling to try to become positive. But the MACD crossed, and you see this thing here. This is the histogram. These little lines are telling you about the inner workings of the MACD, the moving average convergence divergence. This is the 9-period. This is the 9 differential. This is the it's smoothed out. And then what happens is if it crosses the slow 26-period moving average, that's going to be a big deal, because it says that the histogram that shows you visually the distance between the two has become positive. If it deflects lower, which I think is kind of struggling, and I think it could. Oh, it just did. So now only up 11. You see it's been pulled back there. We're going to be watching that. Then, of course, I like to do this in all different time levels. Did I just lose my internet? I hope not. Something is offline. Oh, man. So I'm just going to keep going as if nothing happened. Did I lose internet? Yep, I'm still on. Okay. Some strange things happen. It doesn't happen very often, but it just happened. So, yes, there was a little bit of a blop, and it said internet. And, in fact, I lost my... Oh, I lost the futures right there. Okay, it doesn't matter. Let's just get back to our nitty-gritties here. What I wanted to show you was, and this I think is so important. Look, the SMH, the semiconductor, waiting for symbol attributes. Uh-oh, that's not a good sign. So I personally, on my system, have lost it. So let's just go back to where we were. We were looking at the QQQ. I bet that comes back, but it doesn't come back. Uh-oh. Okay. So I don't want to do anything just there. I'm going to just go. Okay, let's just try to get back live. Okay, I think it's coming back. Is it coming back? Give me 1 sec. All right, I got to talk about some things. I'll do it now. We don't have to. It doesn't necessarily have to have the chart right now. Let me do this. The SMHs, which is the semiconductor index, is trading right now at 258.27. It's up 371. What's really important about this is that the semiconductor index invariably close. Okay, let me just try it one more time. Okay, live trading. Please do me a favor. Come back online. You don't usually fail me like that. Well, just as well I wasn't trading because I wouldn't know what to do. Yes, trade station. Thank you very much. I got someone in the den saying trade stations going off and on. They're having the problem. So let me do this. I'm going to do this for a split second here. I'm going to go back. IWM should come back because it was the last thing I was looking at. Please come back. Please don't. All right, not coming back. It'll be there momentarily. What I am looking at is that the semiconductor index, which really, if you look at the SMHs, you will find, you look at it over since 2009. Almost, not every time, but almost every time it made new highs, the market made new highs. When it failed to make new highs, the market might have gone just a little higher, but then it came down. And the steepness of the decline was commensurate, not always, but most of the time, with the steepness of the decline in the overall market itself. Now, I can't even press the TLT because I want you to show you that the TLT, let's try it again, close, live trading. Nope, not there yet. So the TLT, which is the bonds, Lehman 20-year Treasury Bond Fund, now that's going to be very interesting because that's plummeted. We were looking at that 149, the arch formation. Remember we were talking about that dreaded H pattern? Well, it just spliced through it. And today the TLT is trading in the 145s. So that essentially says, okay, I've got someone saying that they back again. There it is. Receiving initial data. Thank you. I hope it's back. So the TLT means that the 30-year, that's a 20-year Treasury bond fund, but the 30-year, the TYX, and the 10-year, the TNX, that's the 10-year T-note yield. And if you get the 5-year, the FVX, which is the 5-year T-note, that says basically that we're looking at, don't cancel, work online, I can't do this at the same time, I just made a mistake, don't do that. All right, please get me back online. And that the 5-year, the distance, I'll show you as soon as we get back, I'll show you the distance between, if I have time, between the 30-year yield, the 10-year, and the 5. And that says to me, we've got to be watching these bonds really closely. I think that it might be bonds that essentially, that yields start to really make the difference between what we're looking at in the market, because so far, every single thing that could be a negative has become a positive. I have this thing called the dark news cloud cover. Well, there is nothing here that's been dark news that the market has taken seriously and said, hey, this is something, don't do that because we're going down if you keep doing that. Well, that's the one thing we might be looking at. So other people are also saying that trade stations going in and out. I don't know why that is. And it's unfortunate. but it says receiving initial data, but it's not. So I'm not going to touch this chart. The one on the left is daily, and it's a blank. The one in the middle is the weekly. And look, we haven't made a high above the high that's not 217. That's a mistake. The high that was made last week in the IWM, the Russell 2000, so far we haven't taken that out. But I see enough residual strength to say, be careful, because in fact it could be something to watch. There's a break coming up. Basil Chapman sitting in unsuccessfully over the last 5 minutes because I lost my data. I could go to something else, and I will, as we come back, when we return, if we don't have my trade station back, I will do something else in our shows.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the Newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hello, we're back. So I'm not sure that this is correct, but all of a sudden I'm looking at, on a different system, the Dow's up 20, up 11. So this is it. We were talking about just earlier in the show, I said I think that today's the day that we get some kind of a pullback, maybe a day or two of a pullback, then another attempt at new highs. But what I am showing here is that you've got, Goldman Sachs is up sharply. It's up over 4 at 311. It was earlier on. You've got, look at that, Salesforce.com up 8. So this is a very important moment because if there is a pullback here, I think a lot of folks are going to be looking at this and say, oh, my God, now this is all over. But there's just enough residual strength to keep moving higher over the next few days. I suspect that by the end of the week, maybe going into next week, that's when I'm starting to look at the chances of picking up the short side. Why? Because I think on every way I'm looking at the market right now, there's this surge, this fear of missing out. And that always says to me, now you've got people that are chasing. And when you chase stocks and you don't think it through, it just becomes very problematic because you're getting in a level that says, if at this point I'm getting in, let's say your stock was at 20 and all of a sudden it's 28 and it's 30 and you say, I've got to get in. So you get in, you buy it at 31 and suddenly it's back to 28 and you got in at the most recent high. That doesn't mean to say it's the high, but it is a high that makes you emotionally nervous because you say, now it's pulling back. I got in, I didn't wait, and now it's down. And you do that with a few stocks. All of a sudden, you're looking at people in a position where they need to start selling. So I'm looking at this and I'm saying we're getting to a point where I think we're going to see a little bit more of deep consolidation in the market. I don't think we're there yet. I think we're close. I'll follow this up at noon. Hopefully my internet for everything will be back. Belgian Chapter sitting in with Tommy O'Brien, Blue Bear Hour, and I'll be back. Stay tuned for Kevin Ince and his team coming up in a few moments. I'll be back at noon for Tiger Technicians Hour. You've got Steve Rhodes, Dave White, and Tom O'Brien.